Good day, students. Welcome to lesson 71. This will be the last lesson on non-profit organizations. In this lesson, I will mark exercise 4L, and I'm not going to mark in detail exercise 4M because these two exercises are pretty much the same. So what I will do is I will go through exercise 4L in detail, and then I will just for exercise 4M, I will just put the answers for you on the slides that you can just mark your own work from the slides. Okay. Okay, so the information that they give you in 4L is, they give you the balance sheet for Red Aces Soccer Club, the end of the previous year, on the 31st of December 2020. They give you the notes to the financial statements for that at the end of that year for 20x0, and then they give you the statement of receipts and payments for the current financial year. They require you to do the membership fees for and trading account for the year that ends the 31st of December 21, and then they ask you to draw up the statement of income and expenditure, and they ask you to draw up the balance sheet. All right. Okay, so we're going to start with the membership fees account. Okay, and it's not like in the previous exercises that they gave you the total or that they gave you the pre-adjustment trial balance at the end of the financial year. They give you the information at the end of the previous year. So if you start your membership fees account, you know the first thing that you need to do is to do the reverse entries for the adjustments the end of the previous year. Okay, and those information you will find in your balance sheet or in the notes to the balance sheet at the end of the previous year. Okay, so the first two adjustments that we write back, or that we are going to write back, is income received in advance. On the credit side of our membership fees account, we have 2,100. Okay, on the debit side, we have income accrued or accrued income of 2,250, and those amounts I get that amount from the notes at the end of the previous year's balance sheet. Okay, so the amounts that you've received during the year for membership fees, you will get that in that statement of receipts and payments. You'll see that for 2020, in other words, for that was outstanding for the end of last year, you received 1,350. For the current financial year, 57,900, and for the next financial year, 7,950. So immediately if you see that you've received for 22, 7,950, you know that is the amount that was received in advance for the next year. So you know you can do that adjustment. So what you're going to do, you're going to credit membership fees with that 7,950, and you will open yourself that little T account, income received in advance, and you will credit your income received in advance account. Okay. Okay, so let's look at the adjustments and the additional information that they give us. Membership fees amounted to R150 per person per year. At the end of 21, 27 members had not yet paid their membership fees for 21, and the outstanding membership fees for 2020 has to be written off as irrecoverable. Okay, so let me see, what have we received for 2020? Let me just see, 26. Okay, what they give you is the amount accrued. So you can do that adjustment. Income accrued on the credit side of your membership fees account is 27 times 150, gives you that 4,050. So you can do that adjustment for the accrued income at the end of the year. So you credit your membership fees account and you open your little T account, income accrued or accrued income, 4,050. All right. Now we must calculate what is the amount that we must write off. How do we know that? Okay, we know what was accrued for the previous financial year, the beginning of this year. Remember, it's that adjustment that we wrote back there at the beginning of the year. It was 2,250. So that was the amount that was outstanding at 4,20. Now, if you look at that amounts that you've received for this year, you can see that you have received 1,350 for 20 for those outstanding amounts or membership fees for 20 and the difference you must write off as bad or as irrecoverable. Membership fees written off. How do we get that amount? Is that 2250 less the 1350 that we've received, and that gives us an amount of 900 that we must write off. So you're going to credit your membership fees account and you open your little T account, membership fees written off, and that is 900. Okay, they don't tell us how many members the club had. Okay, so that is then the amount that you must calculate. Remember, there's always or most of the times like a missing amount in the membership fees account. It's either the amount that we must post to the income and expenditure account, or it is the amount that we have actually received. But in this case, it could be the amount that was accrued at the end of the year or income received in advance for the next year. All those amounts we have, except we don't know how many members we had or this club had. So that is the amount that we've got to calculate. In other words, that is the balancing figure in that account will be the amount that we need or that we are going to transfer to our income and expenditure account. All right. So it's the same thing as always. Add up your debit side, add up your credit side, because all the other entries in the membership fees account have already been made. So you know it's just one amount that's missing, and that is the amount that we're going to transfer to the income and expenditure. In other words, that's the income for membership fees for the year. So add the debit side, add the credit side, and then you'll see there is a difference on the debit side of 64,050, and that is the amount that we will transfer to the income and expenditure account for membership fees. Okay, so let's do the other adjustments. I'm just going to show you the double entry in the ledger accounts, okay, for the adjustments. Half of the interest fees has to be capitalized, while the other half may be used for current income. Okay, you know that by now, all right. Entrance fees has got an amount on the credit side. You get that amount from your income, from your payments and receipts. That was 5,300. If they say half must be capitalized, you know half you're going to take out and you're going to transfer it to your accumulated fund account, and that is 2,650. And then the rest of that, the other half, you can transfer to the income and expenditure account. So you debit entrance fees, credit income and expenditure account, and you debit entrance fees and credit accumulated fund account. Okay, I'll just show you the calculation for the depreciation. It says depreciation is calculated on equipment at 20% on the cost price, on vehicles on 15% on the diminished balance. And you've got to round off to the nearest rand, okay? So let's start with vehicles. Cost price 84,376. The accumulated depreciation on that was 25. Okay, so the book value or the carrying value of that, the beginning of the year, was 59138. That is on the diminished, so that is the diminished balance. That you remember, diminished balance is cost price less accumulated depreciation. Okay, if you multiply that by 15%, you get 8870.70, but you must round off to the nearest rand. So you're going to round off that amount to 8871. And that is the amount for that is the depreciation for the vehicles. Okay, for equipment, you bought equipment during the year. Let me just see. I think it was in October, and on the 1st of October, you bought equipment for 72,361. Okay, so you can't work out for the whole year on your equipment balance because you bought equipment on the 1st of October. Okay, so we're going to do that in two sections. We're first going to do the depreciation on the old equipment for the whole year, and then we're going to do it on the new equipment only for the 3 months. So the old equipment, the balance was 53404 times 20% gives you 10,680, 80 cents. Okay, and then on the new equipment, the amount for the new equipment is 72361. You bought that on the 1st of October, so it's 72361 times 20% multiplied by 3/12 for the 3 months, October, November, December, and then you get an amount of 3618.05. Okay, and if you add those two amounts for the old equipment and the new equipment, you get 14,298.85. If you round that off to the nearest rand, you get 14,299. The next adjustment is number 4, stock on hand in the canteen. That is easy. You credit your closing stock and you debit your trading stock canteen, 5683. Open yourself that account, the trading stock account for the canteen, and also your closing stock, 4683, and you credit closing stock. Okay. The next one is adjust the interest on the investment account. 1/2 of the interest has to be used as current income and the rest has to be capitalized. Okay, now let's see. Okay, there was an adjustment at the end of last year on this interest. So you must always, in a case like this, you must always check whether there was an adjustment or not in that account. So there was an adjustment at the end of the previous year. So you must do the writing back of the adjustment the beginning of the accounting year. All right. So that is that accrued. There was an adjustment at the end of last year for accrued expenses. What was it? 2,000 rand. Okay. If you get that from the notes to that financial statements the end of the previous year. All right. Interest on fixed deposit, 2,000. So you know that you've got to do the reverse entry for that adjustment. So that is why on that interest on investment account, you've got that amount in entry on the debit side, the 1st of January, income accrued or accrued income, 2,000. Okay. You also know what is the amount that you received during the year for that interest. You can check that. You can get that amount from your receipts and payments. And that was 9,500. You get that under the receipts, 9,500 for interest on investment fish fund. Okay. And then what you can calculate what was the amount that you were actually supposed to receive for that interest. And you can do that. In other words, that is the amount that must normally be transferred to the income and expenditure account. Remember the amount that you're supposed to receive for a year, that is the amount that you normally transfer to your income and expenditure account. But in this case, they said half of that should be capitalized and the other half we are allowed to transfer to the income and expenditure account. All right. If you calculate that the investment was 50,000, okay? And if you multiply 50,000 by 20% for the year, you get an amount of 10,000 rand. So you were supposed to receive 10,000 rand for the year. So 5,000 can be transferred to the income and expenditure, and 5,000 must be capitalized. So you're going to transfer that to your accumulated fund account. So that is why on the debit side of the interest on investment, you have that accumulated fund 5,000 and income and expenditure 5,000. Okay, so you've got those three amounts on your debit side. The amount that you don't have, the amount that you're going to work out to calculate, which is the balancing amount in that account, is the amount that was accrued at the end of this financial year, the amount that was accrued for that interest on investment. Okay. So you add your debit side and you add the credit side, and then you'll see there is a difference of 2,500 rand, and that is the amount for income accrued for that interest on investment the end of 21. Okay, so you can do that double entry. Credit interest on investment, debit income accrued or accrued income, 2,500. Okay, and then we get to the other adjustments. Insurance paid in advance, 1,000. If you open your insurance account, you will have an entry on the debit side that you got from your receipts and payments for 13,000. You've already paid during the year 13,000. And then there was an amount paid in advance for 1,000. So on the credit side of insurance, you write expenses prepaid or prepaid expenses 1,000. And remember to open your little T account for your prepaid expenses account, which you will debit 1,000. Okay. And then if you close that account off to the income and expenditure account, you'll see it's an amount of 12,000 that you're going to transfer to your income and expenditure account for insurance. Honorarium owed to the secretary 500, so that is expenses accrued. Honorarium, you've got on the debit side the amount that you've paid. It was 700 that you got that from the payment and receipts. That was 700. Okay, so the amount that you're going to transfer to your income and expenditure for honorarium is 1,200. So you will have on the credit side of your honorarium account, income and expenditure 1,200, and you will debit your income and expenditure with 1,200 for honorarium. Okay, then we get to stationery unused 273. Remember about the writing back of the adjustments at the beginning of the year. And that is the reason why you will have on the debit side of stationery account, you will have consumable stores on hand 184. There was if you look at the balance sheet and the notes to the balance sheet that they give you, you'll see there was stationery unused at the end of last year. So you made the adjustment was debit, consumable stores on hand, credit stationery. That is the entry for the normal adjustment. Okay, the writing back of that, you write that adjustment back. You will do the opposite entry of that. So the beginning of the year. So that's why there's January the 1st, 21. On the 1st, you'll have on the debit side of stationery, consumable stores on hand 184, and then your consumable stores on hand account that you're going to open, there will be on a credit side 184. Okay. And okay, so then what was the amount that we received what was the amount that you got from the payments, receipts and payments that you paid for stationery? It was 834. You'll see there's stationery 834 under the payments. So that was the payments for the year. And then there is an adjustment number 8 that says stationery unused 273. So that is the normal adjustment. On the credit side of stationery, you have credit consumable stores on hand 273, and that is on the last day of the year. That's for the current year's adjustment. So it's consumable stores on hand 273, and you will debit consumable stores on hand 273. Okay. Adjust the interest on loan number 9. Okay. Was there an adjustment that we need to write back, or that was written back on the 1st of January? Yes, there was accrued expenses. If you look at the notes to the balance sheet, you'll see there under trade and other payables, expenses payable, interest on loan 5,000. So we first need to do that reverse entry. So that is why on the interest on loan, on the credit side, we have accrued expenses 5,000. That is the writing back of that adjustment. Okay. And then let's see, what was the amount that we were supposed to pay? Okay, let's see what was the amount that we've already paid for interest on loan. Let me see if I get that amount. Interest on loan, yes, 20,000. Okay, so on the debit side of the interest on loan account, you will have 20,000, and you have the contra account is bank, 20,000. Okay, let's see, what was the loan? The loan is in ASB Bank for 100,000. Now, if you calculate 25% on that, you get 25,000, and you know that is the amount that you were supposed to pay for that interest on the loan. So that is the amount that you're going to transfer to your income and expenditure. Income and expenditure is always the amount that you were supposed to pay, not what you actually paid, but what you were supposed to pay. So we get that in the information, that is 25,000. Okay. Now, what is the missing amount? Was there any, have we paid all the interest or is the income accrued? Expenses accrued because it's interest on loan. Okay, expenses accrued. If we do that calculation, add the debit side, add the credit side, you will see that there is a missing amount. The balancing figure is on the debit side, and that is 10,000 Rand, and that is for expenses accrued the end of the year. That is the adjustment for accrued income, sorry, not accrued income, accrued expenses the end of the year. And you enter that on the debit side of interest on loan, and then that account closes off because you've closed it off to the income and expenditure account with 25,000. Okay, so let's do the trading, the trading account for the canteen. Okay, remember when we work with the trading account for a specific section of the club or the old age home or whatever, this is the soccer club, then we work with opening stock and closing stock. Okay, if you look at the balance sheet and the notes to the balance sheet, the stock at the end of last year, the closing stock was 4517. Okay, now remember what I told you how many times now, that if you had closing stock the end of the previous year, you're going to do the reverse entry for that closing stock, but you're not going to debit the closing stock because that account's already been closed off. You will do the reverse entry into an opening stock account. Okay, so that will be done the beginning of the new year, and you're going to close that account off to the trading account. So the double entry for that, for the opening stock, is actually credit the opening stock account and debit the trading account. In this case, trading account canteen. Okay, so that is where you get that opening stock of 4517 on the debit side of the trading account. All right, okay, and then you do the adjustment now at the end of the year, where they say stock on hand in the canteen is 5683. So what's the double entry for that? You debit your you credit closing stock account, yes, and you debit your trading stock account for the canteen. Okay, not trading account, trading stock account. All right, and you credit your closing stock account. And then when you close your closing stock off account off to your trading account, not your trading stock account. Don't get confused with the trading stock account and the trading account. Remember, if you think back of your periodic stock system, your trading stock is your normal stock account. You can just as well name it stock, while your trading account is your trading account before you do the profit and loss account. Okay, so you close off your trading stock to your you close off your closing stock account to your trading account. All right, so you debit closing stock and credit trading account. Then you see your closing stock, it closes off. Okay, and then we see what have we paid for the stock during the year. We get that from the statement of receipts and payments, 362. Let me just get that down. 36234. You get that under the payments in the statement of receipts and payments. So you'll have there on the debit side purchases 36234, and then also on the credit side you also get that amount from the receipts and payments is 62367. 62367. All right, and then you've got all the information that you need to calculate the surplus. Hopefully it will be a surplus. So you add your debit side, add your credit side, and then the difference there between the debit side and the credit side is your surplus, which is 27,299. Okay, and that amount will be transferred to your income and expenditure account. All right. Okay, so now we start with the income and expenditure account. The statement of income and expenditure. After you've done you've actually supposed to do first the account and then just write all the information from that account to the statement. Okay, so I'm just going to go through the statement quickly. Membership fee 64,050. You get that from your membership fees account after all the adjustments have been taken into account. The same with entrance fees, 2650. Surplus from the canteen, we have just done the trading account for the canteen. So that is where we get that amount from, 27299. Interest on investment, 5,000. There was also an adjustment for that interest. So you can just look in your interest on investment account and you'll see there the amount is 5,000 that you need to transfer to your income and expenditure account. Donations, 25,342. I think there was no adjustment on the donations. So that is the amount that we got directly from the receipts and payments. The same with the gate money, 82,437. No adjustment, so that it comes straight from the statement and payments, statement of receipts and payments. Okay, if you add those income, if you add it up, you get 206,778. That was your total income for the year. Okay, now we get to the expenses. Membership fees written off 900. You've opened yourself that membership fees account when you've done that adjustments in your membership fees. You've opened that membership fees written off account. That is 900. Depreciation, I've already showed you how to do that calculations for the depreciation on the vehicles and on the equipment. So the total for the depreciation was 23170. Insurance, there was an adjustment for insurance, so the total is 12,000 that you transfer to the income and expenditure. The same with stationery, there was stationery on hand, 745. There was an adjustment for that to get 745, and then the interest on loan, there was also an adjustment regarding the interest on loan. So you've opened that account already. 25,000 is the amount that you've transferred to income and expenditure. Honorarium, there was also an adjustment for honorarium. It was, I think it was expenses accrued was 700. The amount that you've paid was 500. So the total that you transfer to income and expenditure is 1,200. Okay. Water and electricity, let me just see, 2519. There was no adjustment, so you get that amount straight from your statement of receipts and payment. Electricity, 2519. Affiliation fees, 5,000. There was no adjustment, so straight from your income and from your receipts and payments. Bank charges, 383. No adjustment. Repairs, 745. No adjustment. Ties, first team players, 1136. There was no adjustment regarding that. Refreshments, 4102. There was no adjustment. Wages, 5623. There was an adjustment for that, for the wages. What was that? Okay, so there was an adjustment for wages. It was, if you look at the balance sheet, the end of the last year, there was an adjustment for wages. It was the end of last year. So it's an adjustment that we need to write back the beginning of the year. And if you've done that, you will see that it was expenses prepaid the end of last year. You will see that in the notes. Number 3, expenses prepaid wages, 600. So if you write back that adjustment, you will debit your wages and credit expenses prepaid. Okay, so you have a debit amount in your wages account of 600, and then you will also have that amount that you've paid during the year for wages, which was 5023. So if you add that 600 Rand, the writing back of that adjustment, and the 5023, you get an amount of 5623 for wages. Then if you add up your expenses, you get a total of 82,523 for your expenses. And if you deduct that from your current income of 206,778, you get a surplus for the year of 124,255. Okay, so let's get to the notes to the financial statements. We'll start with the fixed tangible asset note. Those entries at the top, land and buildings at cost, we get that from the information on the previous year's balance sheet. to get that carrying value at the beginning of the year. That all those information came straight from the notes of the previous year's notes to the financial statements. All right. And then you get what is new for this year or for the current financial year was that additions at cost price. You bought equipment for 72,361, and you also got that from the statement of receipts and payments. What was it, the amount? 72,361. If you see there, you bought equipment on the 1st of October 21 for 72,361. All right, so that is what happened during this financial year. And the other entries are the ones for the depreciation for the year. I've already showed you the calculations. For equipment, it was 14,299. For vehicles, it was 8,871. Okay, and then we get the carrying value at the end of the year. How do we get that carrying value? We take the carrying value at the beginning of the year, add additions, and deduct this year's depreciation to get the new carrying value at the end of the year. You can also actually write that little note where you say cost price less accumulated depreciation to get that carrying value at the end of the year. I see now in this example, it's not done like that, but I just want to say normally we would write the cost price less accumulated depreciation to get the carrying value at the end of the year as well. All right, but if you do those, if you get those two totals, carrying value at the end of the year, for land and buildings, equipment and vehicles, you get 654,412. That is the amount that you will write in your income and expenditure account. Okay. Other financial assets, the investment in the fish fund is 50,000, and then the stock, canteen, and stationery, you got that from your adjustments. And then trade and other receivables, income accrued. If you look at your income accrued account, you will find those two entries in that account. 4,050 plus 2,500 gives you that 6,550. If you look at your expenses prepaid account, the one that you've drawn up for yourself, you'll see there was the total there was 1,000. That is where I get that 1,000 from. And then the total for trade and other receivables, the total is 7,550. And then cash and cash equivalents, 106,945. That was the balance, that was the balance in your bank account or in your cash book. And that you get that amount from that statement of receipts and payments. Okay, then we get to the accumulated fund, that note. The balance was 519,262. If you look at your accumulated fund account, you will see there is an entry on the credit side for entrance fees. That was the adjustment that says half of the entrance fees has to be capitalized. So that is that 2,650. The same with the interest on investment. There will be an entry on the credit side of your accumulated fund account for 5,000 Rand. And then the surplus that you've just calculated in your income and expenditure account, which will also be entered in the accumulated fund account, is 124,255. So that the new balance in your accumulated fund account is 651,167. Okay, special funds, there was no adjustment or entry in that in the funds. It's actually the fish fund. So it's 55250. All right, I've noticed something here, and I just want you to check. All right, there is something that's not right here, and I can see it because there's something that I told you in the past about funds and investments of special funds. Now just see if you can find out what is the error here. All right, there is a small error here regarding the funds. Try and see for yourself if you can figure out what it is. And if you know what it is, then 100% for you. And then, so in this case, it's easy to make an adjustment in that regarding that error, but I'm not going to change it now or anything. I just want you to have a look and figure out for yourself. I'm saying there is an error here regarding this funds and investment. So just try and figure out for yourself what the error is. Okay. Then we get to trade and other payables. The creditors, there was a balance, but it was being paid during the year. And then we get to expenses accrued. But if you look at your expenses accrued account, you will see that there are two amounts on the credit side. Interest on loan 10,000 and honorarium 500, and that gives you the total of 10,500. And then income received in advance was for membership fees 7,950. And that gives you a total for trade and other payables. Okay, so the total for trade and other payables, the total is 18,450. Okay, so let's look at the balance sheet. Okay, we start with assets. Assets are divided into non-current and current assets. We start non-current assets. That is actually our fixed or tangible assets. The total from the notes is 654,412. The other financial assets, that was that investment of 50,000. We get a total of 704,412 for current assets. Okay, and then, for non-current assets. Then we get to current assets, stock, that was the adjustment, closing stock, 5,956. Trade and other debtors, we've done that in the notes, 7,550, and cash and cash equivalents, 106,949. So if you add the current assets and the non-current assets, you get a total for your assets of 824,867. Okay, and then we get to equity and liabilities, your accumulated fund. We've just done the note for that, 651,167. Special funds is 55250. And then you get equity and liabilities of 706 that is just the equity. The members' equity, 706,417. Then you get the non-current liabilities, that is 100,000 for the interest. It was that loan, 100,000. So that is the total for non-current liabilities. And then you get the current liabilities, trade and other creditors, which we've already done in the notes, 18,450. So if you add current liabilities plus non-current liabilities plus your equity, plus your members' equity, you get a total of 824,867, which is the same as your assets, and it means your balance sheet balances, which means you've done your work correctly. Congratulations. Okay, and I said to you, I'm not going to mark exercise 4M in detail. I'm just going to put the slides on so that you can mark your own work. All right, till next time. Goodbye. Keep well.